Hi everyone, welcome to the weekly market update. So for this week, as usual, we'll be going through a couple of things, but more on the indices, and as well there will be one of the education video we'll be sharing at the end of this video as well. So before that, let's start and see what happened on the Friday itself when the market closed. As you can see, that last week is actually a short week due to US Labor Day. So market has been not performing, it has been falling, but last Friday the market actually closed with Dow ending up at 131 point higher on Friday itself. But after all, for Nasdaq itself, we know that it actually registered the worst week since the March itself. Mainly it's because as we know that Nasdaq consists of those big technology firms. So if let's say most of the firm actually drop, it will actually badly affect on Nasdaq index itself. So like I mentioned, Apple and Tesla after the stock split usually will came down. So as what I have mentioned previously in my video, as if let's say you have follow up, it actually caused Nasdaq to go even lower lah. So that is what happened on last week itself, 4-day trading weeks. So coming weeks, what are we looking at? Firstly, take a look. Stimulus due unlikely until after the election. Not to forget that we left only 2 months before the US president elections. So right now, a lot of during this period of times, those candidates will come out and do some promising on the market itself. How will they deal with this bad economy, these pandemic situations? So a lot of unpromised, over-promised words that will be coming out from them sooner or later. But if let's say, as we know that Republicans like Trump itself is not in the favor, so you see that this week not a single Democrat voted for Republicans, right? So due to this, right, this actually skew back the stimulus plan. So we never know, but if let's say 2 months later Trump to be the next president again, market will go even higher because he will force on what? China trade war. Second, it will force on the stimulus plan once again. Right now, you can see that they actually stepped back on the trade war itself because Trump left how many 2 months, and Xi Jinping, the China president, can be forever over there. So Trump tried to relax at the current point of time and wait until he get elected. Then the cat will become the next tiger once again. Correct? Not? So for the coming week economy, a couple of things to take note. First of all, is actually on the Monday itself is the China industrial productions. So on the Monday itself, industrial productions. So this will actually give and reflect how confident China has recovered from the COVID-19. Because if let's say production has been increasing, of course means the market demand is there. Correct? So this is one of the data to take note on Monday morning. And then the next thing to take note is actually the US retail sales. Retails, so we are the spender, we are the consumer. It does reflect how confidence the consumers give to the market itself. All right, so it's based on their spending behavior. So actually the forecast is lower than the previously, as you can see over here. So they believe that the demand is not back to where it should be or even higher comparing to last month. So that's why they actually predict lower. So we shall see where it goes. Next is the crude oil inventory. We know, if you have been following the charting as well, WTI or Brent is not performing, has been dropping. So this crude oil inventory will show that how many oil, I mean, crude oil inventory is like every twice a week, if I'm not wrong. So it's not very significant, but it gives so-called a data for the OPEC to see whether should they further cut their supply or not. All right. So next will be the most important thing is the Fed interest rate decisions. All right. So this decision, Powell mentions previously, he said that he is going to maintain low interest rate to save the economy, to target inflation rate after all. So definitely, there's 99% chance, or perhaps 99% chance should be at 25 basis points. 0.1% chance would be you will go even lower. It's hardly is going to increase. So most likely, most of the people will be actually believe that no changes of this 25 basis point. So it will keep the interest rate low. But if let's say the 0.1% happens, it cut to 0 basis point, then bond will drop, USD will drop, market will rally due to unexpected move from the Fed. But unlikely it will happen lah. If you go to the predictions, right, you should see that most likely everyone is guessing 100% will remain at 25 basis point. But of course, take note on here as well. You will never know what will happen to the market. All right, so this is the coming week's economy that I'm focusing on, and let's directly head to the chart instead. All right, so this is Dow Jones Index. Right, Dow Jones Index yeah, I write a lot of things here. Not to worry, I will do some screenshot. I will share in my Facebook page and Telegram as well. So this is what I have analyzed over this week. So basically, we will be, our most concern is that what will happen at this current stage right now. What will happen, correct? Not? So we can see that S&P break the previous high. Nasdaq, don't need to say, break the previous high before the pandemic, but Dow Jones didn't go even higher. So will Dow Jones break the previous high? I don't think so. If let's say it should break, it should have break together with them, but it didn't. So using Dow Jones, right, my opinion is that market might not have a sharp decline. That means it will not be like what happened in the February straight away, have one big drop over here. All right, this is because of unexpected move in the market of this COVID-19. But there is no unexpected move unless you tell me tech bubble. But I don't think so. I don't think tech has a bubble. Correction, yes, but no bubble at this point of time. Yes, it's all time high. We need tech after all, right? So it's not like because their financial, their fundamental is good. It's not because they actually hike it up. No. So I don't see a tech bubble at the point of times to have a sharp decline at the whole economy at the point of at the moment. And beside that, 2 months, we less than 2 months for the US go to elections. So presidents will try, Trump will try to go even higher, and there's a lot of money right now supporting the market. So yes, market will be sideways choppy till the elections, till the earnings season in November, just nice. So right now, I believe market will somehow still correct. I'm looking at the next support between 25 to 27,000 as around this circle area. All right, it will just, like I say, it will stay sideways in my previous video as well. All right, so I don't see any new high. Market will break new high if vaccine is ready, if the over promise for Trump and a lot of people, the percentage of voting to Trump is getting higher, they believe he will continue. All right. So this is the uh, only if things happen, it will break the new high. All right. Things potential risk ahead. What vaccine failed? U.S. election. We don't know who will take it, who will be the next one elected, and they will actually stop the stimulus from the government as well. All right. Not supporting, not providing the market, and the positive, take note, one important thing is that the market positive outlook at current this point of time, right, is the pricing has not totally priced in the effect of this pandemic. You get what I'm trying to say now? Yes, stock market is always a forward looking thing compared to the economy. That means stock market move first, correct or not? But if let's say it move forward and then the company statement, their earnings report is not really good, all the impacts start to come in, bond default, whichever thing, loan default, affect the bank, affect the business. Yes, then we will see this is the risk that we are going to take. All right. Before that, all this is I will do a screenshot and show you guys. I'm not going to go further in. So next thing, we'll look into Hang Seng. I hardly touched on Hang Seng previously, as you can see, but I'll just cover it since it's also one of the major index in Asia. So as we can see that what are we looking at right now? This is a really monthly chart. This is the monthly chart of Hang Seng Index. Right now we are riding on the channel itself, and last Friday is closed at the 100-day monthly moving average. All right, this is monthly, so I need to do some changes over here. All right, this is monthly, not weekly, monthly. So we look at the weekly. Yes, a lot of people see that there's one, like it's considered uptrend, but to me, I think this is just an inverse pullback. All right, the major downtrend is still major downtrend. In between, there's one minor uptrend. So where am I looking at? So looking at the money chart, monthly, of course, it takes a few months to happen, right? So we never know. But if let's say it failed to support here, I'm looking at the 200-day monthly moving average. This is very, very strong, significant. Can you see it never breaks since when 2000 plus? All right. So this is a very strong area. Okay. Next thing, STI, local market. All right. For local market wise, where am I looking at? Local market, STI is boring, some people say. Why? Because movement slow, right? Yes, movement slow. But for STI, we can see on weekly market, where are we looking at right now? Can you see? Since February, market drop, pullback using Fibonacci, staying around 30+%, all right? And then go up to 50%, retrench back again. So market US side, going all time high, but STI is like a dead, the dead country after all, the dead index. But the thing is that right now what we see is this is a descending triangle. Can you see that? It's a descending triangle. All right, descending triangle happen on the downtrend, right? It's very strong, very significant. So where am I looking at? Yes, if let's say it failed to support at 2005, the next level I'm looking at 2004 followed by 2003. All right, this will be the final target. Okay, so descending triangle break below, then we'll do the mirror image over here. All right, so this is what I'm looking for STI. To me, is at the bear side at the moment. All right, but of course the room for it to drop cannot be compared to the Nasdaq and S&P, which has went even higher. So risk is limited for long term. Yes, if you want to go in, yes, you can. You is I mean, some people believe STI is for a dividend stocks. I mean, a dividend growth, collect passive income. If you want, you also don't want to long at the wrong timing, right? Wait for it to drop at this decent level, then you long for your long term investment. After all, okay. So this is where I'm looking at. Next, US oil, WTI. All right, WTI. So this is the weekly chart as well. Given the call to short, I'm going. It seems like it's heading to my TP. If you're still holding, congrats to you. Otherwise, try not to chase it. Okay, try not to chase it. So share on the 9th August. So where are we looking at right now? I'm looking at this zone, this range level at 31 to 34 level. All right, this is actually between the 50% to 61% Fibonacci. Okay, so the demand is still a concern out there after all for WTI, for oil itself. So as you can see over here, you can see an OPEC bid to rescue the oil market because demand recovery starts. So this is one of the reason. Um, uh, which I believe that market will continue to drop lah. I mean for oil itself, of course it's not a very big drop, but like I say, if it's still a concern, no demand, then why do you want to go enter long right now? I know it's cheap, but it's not at the cheap price right now. All right, this blue line is at a very strong resistance at the moment. So as long as it don't break it, you don't stay above it, I don't convince that oil will continue to go up. So right now, this is the range I'm looking at for oil itself. Okay, so next, all right, I mentioned I give a call to long Goldman Sachs. Uh, why? It's because of this triangle. All right. So on the day itself, when I give the long, it's because it's touching at the lower channel of the triangle. That's why I give my long call. But the thing is that it actually break down. So right now it's being supported. All right, supported by this 20 days moving average. Let me see. Supported by this. No, supported by this 100-day moving average. All right, so but look at the weekly chart itself. Can you see it's still triangle? It's not totally break. So my first immediate support will be 195 followed by 190 is my stop loss. Why I choose financial market? As you can see from this news itself, Wall Street higher as cyclical step up amid tech back. So you can see that actually they shift out the sector from the tech sector and they go into sector like financial and industrial. All right, so this is why I choose. So investor up their bet on this cyclical stocks like financial and material. Can you see that? All right, that's why financial is one that I'm choosing. Goldman Sachs out of the rest of the comparisons. So when you have a growing economy, you tend to have, you know, financial will be the next for the rising economy to go into. That's why I choose Goldman Sachs. I will closely monitor. If let's say I have to manual close, I will give you a shout in the Telegram. Otherwise, we will just respect the stop loss. Okay, next, let's move on. Few stocks over here. So next, WEC I mentioned previously. WEC Energy Group. Uh, I will still maintain my buy call over here. Right now, it's just flirting around this support and resistance level. So waiting for this 40-day moving average to catch up. Then I'm looking for it to burst to $104. All right, we shall see how it goes. But if you haven't entered, it's a good chance for you to nimble a bit under this current market situation. It's wise to use the word nimble. All right, next thing that catch my attention as well is this Coke. All right, this is a really chart. We know that market has been plunging for the past whole week, but for Coke itself, it dropped, pull back. So where are we right now? Can you see this is a ascending triangle? All right, you say that yes, market is dropped, but overall, when you look at Coca-Cola, right, you can see that is a uptrend intact. Correct? It pull back, touches the 100-day moving average, and then it bounce back. Right now above 40 days. So overall, Coke is still an uptrend. Can you see that? So right now, forming this triangle, yes, I am giving it my bet on Coca-Cola to go even higher. Alright, so where are we heading to? 52 followed by 55.5. Alright, using Fibo, if you don't know, just draw from the top to the bottom and you can see nicely touches 20, 30, 50%, break above 61, flirting around this zone area. But I believe code should go higher. Alright, so my target, if you never catch, see is there any pullback. If not, you should actually long it and then look for 55 around there. But disclaimer apply. Alright, if you can't trade, you don't dare to take the risk, then avoid it. Alright, nothing wrong to miss the boat. Next thing, that's all for my this whole thing. I mean whole weekly market update. But next thing, I'm moving into one of the education video at which I usually hardly go into one of the sector or one of the product, which is forex, the currency. So this week I'm touching on this currency. Is called USD Canadian dollar. USD Canadian dollar. Alright, so if you are not a forex person, then you can just avoid it. If you don't mind, you can just nimble a bit as like I say as well. Okay, so this week, this education video will be on the USD Canadian. Let's repeat one more time, USD Canadian. Why I choose this pair? As we know that if you go compare to other currency pair, US dollar has not been doing very well. Alright, mainly it's because due to infinite QE, a lot of money printing to pump into the economy, to save the economy due to this pandemic. Alright, second is because Fed decided to keep the interest rate low, as most of the investors know out there. There's no way that they're going to hike the interest rate. So when interest rate low, USD will weaker. So why do I choose USD against Canadian this pair? Okay, so first of all, based on TA, we can see that USD has been plunging since March. Alright, so based on the chart itself, we can see that on the daily chart, it actually break above this resistance line. Can you see that? And there's some significant pullback, and right now I'm looking to long USD Canadian. My stop loss will be at whole round figure 1.3 for USD Canadian. Alright, so why I choose Canadian? And the education for this video is because Canadian is highly, last time, I mean previously or theoretically, is very close related to oil. You can go and Google more about it. You can Google how oil move with USD Canadian. Alright, I like baby peeps. This is where I learned my forex from. Alright, you can see over here, if US demands rise for the oil itself, manufacturer will need more oil to keep up the demand. Alright, this lead to the rise in the oil price, which might lead to the fall in USD Canadian. Why? Because they need more Canadian dollar, right? So when Canadian go up, USD will come down. Understand or not? That's why USD Canadian will fall if the price for oil go up. But right now, if the oil demand fall, as we know, look at the news itself, oil demand recovery stopped. So if the demand for manufacturers will stay aside, all right, they don't need to buy more oil. So if let's say they are not going to buy more oil, the demand for oil fall, USD remain. No one want to buy Canadian dollar, so eventually it will go higher. All right, USD up, Canadian down. So oil has a negative correlationship with USD to Canadian, 93% between 2000 to 2016. All right, so why? Of course, like I say, people say 2016. So what happened right now? But it's somehow still significant. So why? It's because Canadian, take note, Canada economy is depend on export, with about 85% export going to the big brother down south, the US, because Canada is the largest supply of oil to US. Can you see that? US crude import by country. Alright? So this is why US Canadian is close related to oil itself. Alright, so I'm looking on USD Canadian to go up based on this chart itself. But like I say, disclaimer applied. So take note, if you can't trade, then stay away. Next thing, I'm going to input in compare US oil, and we shall see how the chart moves. Alright, let's see. And I remove all my indicator. Alright, so we can see Okay, can you see over this point in March, all right, when demand go lower, all right, oil actually drop. Right now we are comparing to oil. This is WTI. Oil drop. No one want Canadian. USD went up. Can you see that? So it's a negative correlation at this point of time. So they believe at this point of time when somehow they believe market to start coming in, demand coming in, when oil went even higher, Canadian stronger, so market drop. The USD Canadian drop. So at this point of time, if demand is going to fall again, where shall we be looking at US Canadian? Is your take from this education video. Alright, so that's all for my education video. Hopefully you learned something from this FX correlation pair with oil. That's all. Thank you very much everyone. Have a nice day. Bye bye.